Hello, my wonderful people. We are back again here today, and I received 4 or 5 inbox requests asking me how to do the strategy that I shared 2 days ago. I think you can see here. So, this is our Telegram, no, this is our YouTube channel. So, this strategy was shared 2 days ago, and a few people inboxed me. The title of this video is Trade Spikes in Boom and Crash with Great Accuracy. So I've also done a video of how to install the templates that I shared on that strategy. Now, as I said in former videos, there are no custom indicators for Android, and I know many of us are trading using Android. Okay, so this one here is just an upgraded version or improvised version of how to trade using an Android. I hope you understand. So let's go to it. So this is our MT5. I need to off the net a bit and put it on flight mode. Sorry for that. Yes, we are back. So this is our MT5, the derivative server. And what I've done, I've added one more feature to this so that it can help you to know the trend direction. Okay, and we have the moving average 200. So let's check the settings, and this will be very fast. So we have moving average 200, period 200, shift 0, method exponential, apply to close. Okay, and then we have Ichimoku, where Tenkan Sen is 9, Kinjun Sen 26, and Senkau B is 52. That is always the default settings of Ichimoku. Okay, but on the lines, we just need the Tinkon Sen to show. All these others, we put it to be the same as our background color. Okay, so that is done for the main chart. And then for the MACD, here are the settings for the MACD. 8, 10, 8, apply to low. 8, 10, 8, apply to low. Okay, so of course it's not going to be exactly like the PC version, because for the PC version it was custom indicators, but this is just an upgrade or improvised version for the mobile. Okay, so this is how it works. Every time, if you want to trade spikes well, trade if you are above or below the 500. If it is boom, let it be above the moving average 200. I mean, let us be above this line. Okay, let us be above this line. Okay, another thing you find, like here, the oscillator here is bigger and this is smaller, so it clearly indicates a divergence, this one here and this one here. And then as these small spikes are coming, and all of a sudden a bigger one will come that will make us cross the line 200. Immediately you close the line 200, and you had seen these two divergences on our MACD. Okay, like the bigger one first and then the smaller one second. It gives you the idea that we are changing direction. Also, anytime we are moving around moving average 200, it tells you that the trend is not very strong, so it will really go in your favor. So if this spike happens and it makes us to cross the 200, then from there we enter. Okay, we can enter and then just move with the trend, because I said specifically in that video that it is a trend strategy. Okay, and you can always close your trades as it's coming back. As it's crossing back, the trend is changing. Okay, so please note again, the strategy applies exactly like for the PC, but I've only added the moving average 200 to help us with the trend. Okay, I've only added the moving average 200 to help us with the trend. And sometimes you find that you may not be far from the moving average 200. Like check here. This MACD here is very big, and then we come and get a small one here. Immediately after this first spike, this divergence here, immediately we get this first spike, you will know that another one will come, especially if we're coming to touch the Ichimoku, because we are already around our moving average 200. So we do not need a lot of pressure to cross the trend. Okay, so those are some of the sweet points. And as I also made it very clear, like you see this point here, if our MACD is on one block, don't even try to catch the spikes. If our MACD is in one block, don't try to catch the spikes. What I also made very clear in, you see all these very good spikes are happening around area 200. Yeah, and it will go up. So you just go with it. And what you see down here is that a series of spikes on the same block of the MACD, but it is forming a divergence, like it is getting weaker and weaker as it goes up until it breaks. So the second time a small MACD forms, then from there the pressure goes up. So this here was surely to tell you that, you know, the sellers are giving way to the buyers, and then all of a sudden we are at moving average 200, then it went up. Okay, so what are the rules again? Still apply the MACD as it was instructed in the former video. Secondly, always check that we should be around moving average 200 or above for boom, and below or at moving average 200 for crash. And then the third point is, after the first spike has happened, just ride with the trend. Every time it's coming to touch the Ichimoku line, you open a trade, or you just can open one trade here and ride with the trend until you come and close while it's crossing back again. Okay, and another thing, as I mentioned in that former video, I said this strategy works best with the 500s, not the 1000s, because the 1000s tend to be sluggish, and they don't spike in a continuation like this. Okay, so I said do the 1000s with some wisdom, like don't just trade. Okay, so that's it for this tutorial, guys. It was just a short one because it is a continuation of what I'd shared before, only that this is a mobile version. Thank you so much, and God bless you. Bye bye.